Hi, Nikki James here with Cross Country Mortgage, and I am here for another chat with Chase. And Chase is with Coldwell Banker. Hi, Chase. Good to see you.
Good to see you.
Thanks you for joining me. We're going to talk today a little bit about strategies for being a buyer in this new marketplace. So we're in the fall of 2022, and things have changed, and rates have changed. The house pricing market has changed, and there are some strategies that I think are little known that help for sure help buyers get in and get comfortable with prices. So Chase, tell us a little bit about what you're seeing in terms of where we are in the market.
Well, I'm so glad we're doing this because there are many headlines out there about the real estate market. And as we know, all markets are local markets. What I see here in Colorado, especially in Denver, is, 6 months ago, we were having bidding wars of 100,000, 200,000 or more over asking price, waiving inspections, guaranteeing appraisals. If it doesn't appraise, you come up with the cash to make the difference up. What we're seeing now are higher interest rates, but we're seeing seller concessions, lower prices. With the concessions, we're able to buy down the rate, which I know you're the expert on, but I don't think most people are aware that we're here when the market, whatever market we're in, we're here to be creative. We're here to help you get that home that you want. There's always something that we can do. If you want to wait for rates to go down, then you're going to find yourself, I think, competing against everyone else who is waiting.
Yeah.
And we're going to be right back in there to waiving those contingencies. Right now, I see it as the best opportunity. I just had a closing. I was able to get a $20,000 seller concession to buy down the rate, and then another $5,000 after inspection. Because the seller was just ready to be done with it.
Yeah.
And, they had invested the time to market the home. We came along, they didn't get exactly what they wanted, but they got pretty close, and it really helped the buyer as well. So everyone walked away from that winning.
Yeah, we're going to chat about the buy downs and do the math on what is that and how does it work. But I know you said something to me earlier that really stuck with me, which was if you're renting, it's always a good time to buy.
Always, because you're paying someone else's mortgage, not your own. And when you move out, you get nothing back.
Mm-hmm. It's so true. It's so true. And, we talk about buying cars or other big purchases that are meaningful. You have to not look at your house in the same bucket as that. This is where you live. Chase was telling us about a lady who, I don't know if you want to do the quick story of your lady who found herself, needing to move out, and it was not a good time for her.
No, that's another thing. When you're renting from another person, the other person's in control. You only have that lease for that amount of time. Most of the time, they'll send you a renewal, usually with a rate increase, or they'll send you a notice that they're going to put the property up for sale. Especially the past couple of years where values have risen. Mm-hmm. And so, you're really not in control of where you live if you're renting. You never know what's going to happen. Chances are they're at least going to raise the rent.
And it's such a good big point that your house is not just a financial asset. It is where you live. It is where you have your kids and all of that, or your dogs or whatever. So let's circle back to these buy downs. So buy downs are basically, it is just math. So it is where we use money up front to buy the rate down, which is where the term buy down comes from, to buy the rate lower. So this one here, we were comparing a $50,000 price reduction to a buy down. And let's talk about it from the seller's perspective. It's actually cheaper for the seller because the seller was going to have to pay $50,000 to reduce the house price. This was a $1 million home, 5%. They only had to pay $24,000 for the buy down, but for the client, it saved them over $90,000 more than that price reduction. So it's a win-win for everybody. There is no, well, the seller's winning, I shouldn't win. It just makes sense. This is what we call a permanent buy down, where you put money up front on a 30-year fixed, and the rate is brought down. Just zip down here. This is more of the math. So you've got $1 million home. The first column there is the existing price. don't pay attention to the interest rate so much as it's just an example here. Are they there? Are those interest rates at that level? Yes, no. It depends on what day you're watching this webinar. But price reduction, again, 50,000 off the price. That's a savings for the buyer of about $250 a month. But buying that rate down by 1% is for the life of the loan, and over the term of the loan, it's huge. It's a $300 and some a month difference in payment. So it's a fabulous way. And in this case, on a permanent buy down, the buyer also gets to qualify at that lower rate. So at that 5.5, the buyers, that's what we use for the math for qualifying. So it can also help in a qualifying. And you can go further. This was just one example. Buy downs are currently quite attractive. So in terms of the math, it makes sense. We're getting more because the rates are high. We're allowing rates to get bought down.
I'm starting to, let's say I'm a buyer and I see headlines saying interest rates have doubled. Well, they've doubled from a year ago when they were at the lowest that they've ever been. Mm-hmm. It's not really a fair comparison, but it's a comparison nonetheless. It's a headline. What they don't realize is that we're able to do this for them. And I'm starting to see sellers advertise, hey, we're offering a rate buy down. Or if they're not advertising, I can pretty much tell how long it's been on the market, whether or not they'll be receptive of that. Most of the time lately they are, because they don't want to go into the winter still on the market. They'd rather take the reduction, give it to you for the rate buy down. You're able to buy the home at a lower interest rate.
Exactly. Yeah, no, it's a phenomenal opportunity for both buyer and seller just to get what you both want, which is they want to sell their house and hopefully you want to buy their house. This here is a different type of buy down. We call it a 3-2-1 buy down, and it's where we take a 30-year fixed mortgage and we buy it down by 3% the first year, 2% the second year, 1% the third year, and then the 4th through the 30th year, it's at the actual what we call the note rate. And this was another example of how we could show the savings. Again, it's significant. The other enormous thing for the client, for the buyer here, is they get to have a rate of 3 3/4 for that first year. That is their rate. The seller is paying the difference between what they should have been paying and what they are paying. And so the cost of the seller is $34,000 versus the 50. So, it's not enormously different, but it's a significant savings, a significant difference for the client. They're going to save $125,000 over the life of the loan. Now, obviously, probably what will happen is they won't keep the loan that long. Right. And we were talking earlier, we suspect that rates may come down. Nobody's going to guarantee it, but we suspect that we may settle once inflation gets in check, once we've got through the Feds raising the short-term interest rates, which is likely to go through some of 2023. But at some point in end of 23, 24, most economists are predicting that we'll have some lower interest rates. So then what do? We refinance. And then you've paid 3 3/4, 4 3/4, and then you refinance. So it's a phenomenal option to get you in at kind of the today's housing prices, which you love, with yesterday's interest rates, which you wanted.
Yes, and this is such a great option. We've got 2 great options. But like when you're looking at this, okay, so in year 3, I go up to 5.75. Well, if interest rates have found themselves down below 5.75, the question is, can I refinance? The answer is yes. So you've saved quite a bit of money year 1, year 2. You're now getting the best rate in year 3 or year 4, whenever it happens. So it's a really good opportunity. I think so many people are waiting for a housing crash. I mean, I've had friends ask me, is there going to be a housing crash? Well, in order for there to be a housing crash, there has to be a really high foreclosure rate, and there isn't. We aren't seeing foreclosures rise. We're seeing people maybe wait to sell their home, but we're not seeing, some sort of catastrophic event happening. What we're seeing is a rate hike. We have an option to buy the rate down. It's as simple as that.
Simple as that. That's just a phenomenal point. And a lot of people, because it wasn't that long ago, remember the, Great Recession in 2008-9. And we have to remember that was caused by the mortgage industry, by a lot of rates that were adjusting to payments that people couldn't make. And you're absolutely right. Then we had a ton of homes on the market because they were in foreclosure, and it was a completely different environment. We didn't predict that. We didn't predict the pandemic. The pandemic was, we the government, threw money into the economy to help people keep going with the PPP loans. And now that's why we've got some inflation. We've got a lot of money chasing, too few goods. And it's going to happen that way for a bit, but it is not the same. But even if it was, and you look at whatever the reduction in house prices that we had in that time, well, look where we are now, right? Wow. Look where we are now. So again, it's always, as long as you don't have to sell in a market that doesn't make sense for you, as long as you can have some other option, it's a great time to buy. And it's a great time to sell if moving to whatever else makes sense for you and your family, moving out of the area, which nobody, as we say, nobody moves out of Colorado, so they're all coming in. But moving up, then if it makes sense, your family's growing and you want a bigger house, it makes sense to sell. And there are ways that you can help buyers and make your house look attractive. Offer this buy down up front, rather than waiting for a buyer to come to you.
I can just tell you this, Nikki, as someone helping buyers, it's been so nice to let people take their time walking around a home, getting a feel for it, instead of a 15-minute showing, panicked, knowing that there are 15, 16 other offers on the same home, and then trying to figure out, okay, do I like it enough to pay 100 to 200,000 over asking, guaranteeing that with my savings if it doesn't appraise? That is not an exciting place to be. It's very nice to be able to offer people a rate buy down, an inspection, ask for things to be fixed if they need to be, knowing that it has to appraise. If it doesn't appraise, then we'll have a conversation with the seller about changing the price. But it's much more consumer friendly. Still, sellers are doing well, but it's really nice to have people be able to take the time, imagining themselves living in a home and saying, yes, I want it. Can you get it for me? And can we get the rate buy down? Can we have an inspection? Can you guarantee that it will appraise? And the answer is yes to all those.
It's lovely, as you said, to be in what I would call a more balanced market. I think we're changing still. We're still getting used to it. But we're in a changing market headed to a balanced market where it's not an enormous win for either the buyer or the seller. It's just, a decent, good market. So it's a good time to buy.
It's a great time to buy. And one of the best markets I've seen for buyers in a while, with all those things I just discussed. It should be fun. It should be exciting. You should really be able to take the time and imagine yourself living in a place, and that time is here for you.
Brilliant. Brilliant. Well, thank you for joining me again with my chat with Chase, and we look forward to helping you. Reach out to us. We are always open to a conversation.
Thank you, Nikki.
Cheers.